All right, evening, guys. How you doing? All right. So, thanks for joining me. 5 p.m. I'm going to maybe give it like an hour, maybe 45 minutes actually. So I've got a 6 o'clock meeting, just to kind of see what's happened today with the Deliveroo IPO. Um, Not the day that I think a lot of people would have been or would have hoped for, particularly if you managed to get into this stock at the initial offering of the community offering with people like Hargreaves Lansdown or maybe Primary. But where do we actually go from here? What actually went wrong? I just think this is a case of big investment house is not really buying into it, and unfortunately, we don't know how many shorts were actually put against the company. But I can guarantee you that there would have been a number of investment houses that possibly took a short position against this stock, given the fact that they had some really, really bad press over the last week or so. Where did the stock actually end up? So it actually closed at £2.87 pence. So it's 30% down on what the original offering was. I mean, the trading high for this stock was actually £3.90 at one point during the day. It went literally at open, it dropped 30%, and went down to £2.71. So it's made back a little bit of ground, but this definitely wouldn't have been the offering that people would have hoped, or how people would have hoped the day ended, considering that if you did get in at the very, very primary, offer, you'll probably sit on a little bit of a loss right now. But one second, guys, let me just check out this audio. Yes, again, it should be fine. Right, let me know if that's okay, guys, because that should be okay now. If not, let me know. Let me just check something out in here as well. I watched the one back this morning and it was fine on the audio, and the audio is set up probably better. Okay, cool. That's good. Good to know. Yeah, cheers for letting me know, guys. So, yeah, I mean, I know a number of people who got in very, very early today, but let's have a look. I mean, it closed at £2.87 roughly today. And when looking at some of the news and stuff like that, we know that some of the big investment houses did not actually buy into this stock. So there was a list here. Let me just find it actually. And there's actually some knock-on repercussions for this, because there's been a few IPOs, tech IPOs recently that haven't gone according to plan. And what Rishi tried to do with the budget was he tried to introduce a little bit of legislation to change things, to move things around. So, number one, that our markets will be open to things like SPACs, special purpose acquisition vehicles. So, SPACs are all the rage right now. And Rishi's trying to bring our financial market so that we can actually compete with the likes of, America when it comes to those kind of things. When it comes to SPACs, Americans are by far leading the way with this. And it's certainly a new way to get companies to market under an initial public offering. But yeah, looking at this today, so those who did not actually get invested because they said they wouldn't based on worker rights, we've got Legal in General, M&G, Aviva, Aberdeen Standard, BMO Global, and CCLA. I mean, these are really, really big investment houses. And it doesn't really matter what anybody thinks, but you need companies like this who are sitting on, hundreds and hundreds of millions to be interested in the stock in order for the stock price to increase. It's simple. It's fundamentals, right? In order for a price to go up, you need to have demand that outweighs the supply. And when that happens, what then naturally is a consequence is prices go up as a result of that. If you get into an environment where most investment houses aren't interested, and these guys hold a lot of money, are not interested in a stock because of workers' rights issues or profitability issues, then this is really what tends to happen. The fact that, well, you close down. And I said this morning on the live. I think if you're Will Shu, who set up Deliveroo, this is a good day for him personally. I think it takes something special in order for you to get a company to float on the stock market. That in itself is an achievement. But you do have to start. And I think if anything at all, one thing that I definitely take away from this is the fact that, for once, there was a little bit of concern over actual workers' rights. I think that's really, really important. So the ethical side of what they do, and not just that, I could be cynical and say, well, actually, they're only worried about that because they think the rules might actually change, and therefore that might further impact the profitability of the business. But I think it is a very interesting thing that's happened today. And we don't know how many of these companies actually took short positions against them. I don't know whether that information will ever come to light, but I'm pretty sure, I almost guarantee that there would have been a good number of short sellers out there who would have opened a position betting that this was going to happen to the share price. So what does this mean actually for, tech IPOs and trying to attract these businesses into the UK market? It's not a good place, really, obviously, because, what was it? Arrival floated. Was it today or day before yesterday? And that's a tech startup in the States, one of the biggest so far. They floated a ridiculous amount and really, really well. But again, that's a tech startup. Are we going to be able to attract tech startups to start up and IPO here in the UK? There's a lot in the news saying that this is not necessarily a good thing, that it doesn't instill a lot of confidence. But I think when you look at the overarching reasons why, there are fundamental issues with the Deliveroo model that I think investors just did not buy into. The question is, there is a question here actually, which I think is a really good question. Let me just find it very quickly, because I saw this earlier and I thought this is a really, really, really good question. Where was it? Where was it? It was along the lines of, since they closed down um, against the original opening offer, is now not a good time to buy because surely it will go up. Let me just find it on here and see if I can pop it on screen. And that in itself is a good question. Like, you talk about trying to find opportunities within the market. You buy stocks that may seem to be really, really good value, because then you have the opportunity to obviously get invested within them, get it a good value. And if the company then grows, you then see your investment returns off the back of that. I think if you are going to be looking at buying Deliveroo, and one of the considerations that you're leading with is the fact that actually they closed down today, I think that's a good reason. It is one of the things that you would do in your research. However, I think you need to look at a few more things than just like close down so it looks like pretty good value. You need to have a look at the business model. You need to have a look at other challenges that are facing this business. And we spoke a little bit about them this morning when the market essentially opened. But I wouldn't go and buy Deliveroo just because, well, they closed down. So surely the share price has to go up. The things that drive the share price up are numerous. A lot of them you can't actually control. So, profitability obviously drives the share price up. That's one thing, right? Things like the workers' rights issues. How does that actually impact the financials, which might then, impact profitability? That's a big issue with Deliveroo as well. So I would be looking to make sure that you're comfortable with all of those issues first before you go and put a load of money into Deliveroo just because they closed down today. Does that mean that they're not going to open up tomorrow? Absolutely not. They may have a really great day tomorrow, but I think it's really important to kind of go back to the basics of what you're doing when you're actually buying stocks, right? You should, unless you're trading or looking to just have a short-term sort of return, or you're scalping, you should be buying companies because you understand the business, you understand what they're doing, you believe in what they're doing, and you can see that they're going to turn a profit at some point in the future. The profitability road for Deliveroo at the moment is a little uncertain. I think the biggest thing that I think that has overshadowed this whole thing was bad press around workers' rights. I think if they didn't have that this week, it wouldn't be such a big issue. You may have seen maybe one or two of the bigger boys actually come in as regardless, but because it's been in the news, I think that in itself has had a real impact on what happened today. But it's a really, really difficult thing. But should you go and buy this stock? Yes, or yes and no is the answer. I probably won't buy this stock. I mean, when it got offered, I looked at it and thought, nah, I'm not really too sure. Does that mean you should go and buy this stock today, tomorrow? Make sure that you do your research before you do. because it's very, very important that you're comfortable with the reasons why you're buying something. And you know what? We don't speak about this a lot, but actually identify reasons why you would sell it if you had to sell it in the future. They might have a stellar run tomorrow, but I always say this, if you're going to invest in a good company, you invest in the company because you believe in it, then they're still going to be there tomorrow. They're still going to be there in a month's time. So oftentimes we rush. We feel as though FOMO, we're going to miss out on something, and therefore we take a really rash decision thinking about the money that we can make right now. Like whenever you're investing, even if you're trading, you protect yourself as much as possible with things like stop losses or trail stops and trading stops and things like that. The sentiment is still the same. What is the downside in any equations? If you're going to buy this, I think it's really important to have a look at some of the financials. I showed them this morning. Where's the profit going to come from? Yes, they've had a massive boost in revenue, but they have very, very high operating costs. The operating costs are high, and that is without giving riders employee rights and no pension contributions, no holiday pay, sick pay. They're struggling to make profit without those factors in there. If that needs to change in the future, and there is a piece of, I was reading something early this afternoon saying that actually they don't feel as though um, that is likely to change here in the UK because of the way the laws are structured. In places like Spain, for example, and there was somewhere else where they've currently got a law suit going on, they say it may change in those regions, but in the UK, I mean, the UK forms a big part of of their market. But here in the UK, the laws aren't as clear cut. So Boris, being Boris, the way he set this up, yes, the gig economy is real for him, and the rules as they currently sit, they validate the current status quo. So there is, from what I've been reading, there doesn't seem to be a big sense of a threat when it comes to workers' rights potentially changing in the UK specifically. That doesn't mean that that won't happen elsewhere in the other 12 markets that they operate. But it is going to be a big factor in the morning, in the period moving forward, because if you're going to buy this stock, you kind of want to make sure that you're going to be okay with whatever it is that your decision is and how this might actually play out. So let me just see what we've got on here. I'm interested to know, did anyone get into this morning that's watching this? Did anyone get in on the on community offers in with Hargreaves Lansdown or primary bid? Did anyone get in? How are you feeling? I'll be interested to know. That's what we've got here. There's a question here. When is Deliveroo going to be available on Trading 212? I have no idea, mate. That would be a question for Trading 212. Still believe it's going to hit £10 before the end of the year. Mate, you know what? The thing is, right, and this is the main thing. So if you believe that something is going to hit something, that is absolutely spot on, because it means you've got conviction behind what you've actually bought. And hopefully you've got, your own, not just conviction, but your reasons based on research why you feel that's going to happen. And I think whenever you buy a stock, that conviction is really, really important. You don't want to buy something you're not really too sure of. I mean, who's going to go and buy anything that are like, I'm not really too sure. I don't know if I really like this thing. I'm just going to buy it because it's cheap. Like, nobody does that, right? You want to make sure in general life that whatever you're buying, number one, you're comfortable with, and second, that you're actually going to have use for it. So I like this kind of stuff. It doesn't mean, and this is, again, really, really important. Because you have conviction in this, your conviction overrides everything else, other opinions. That doesn't mean you close yourself off to other opinions, but your conviction really does matter, because it is the source of why you've made that decision in the first place. And it's really, really important to make sure that you do have convictions when you're buying things like that. So, mate, bravo to you, mate. I'll certainly be watching it closely, because it will be interesting to see what happens in the next few months with the share price. Does it steadily go up? What happens? Do they do something internally that means that actually, you know what, they make it a little bit more attractive and some of the big boys actually moving? I would argue that perhaps if they did do something around the workers' rights, which I don't think they will, that actually all of a sudden it would attract some of the big boys who have stayed away from it for those reasons, possibly. But who knows? For them to make that kind of decision, though, is not a light one to make. So I wouldn't really hold my breath waiting for that. Let's look at this. Do they invest in companies, producers in other countries? where there are no worker rights, I find it hypocritical. Um, yeah, you could say that. Um, Producers in other countries, yeah, you could say that. I mean, at the end of the day, I mean, businesses are set up the way they're set up, aren't they? And I hate the line business. You know, it's business. It's not personal. It's business. I hate that line because that's almost like it's almost like a get out of jail card for when you know you're going to do something that's really messed up and shady. You're like, oh, we're running a business, so it's completely fine. We're going to be ruthless, or we're going to do something that actually doesn't sit right from a societal point of view. I mean, you could argue that Amazon has this argument as well around minimum wages and working conditions. Most companies do. Tesla certainly had those kind of arguments in the past as well. Um, the guys of business, this is what we need to do for business. I hate that phrase. I absolutely hate it. So, yeah, get out free card. This is a good bit here. I did not know this. Free Trade have just added it to their list today. I didn't know that actually. I might need to go check them out on there. Harry, what's going on? This is a good question. You know what company decides to go public? How do you find out what shares how many shares they're selling? If you sign up to people like Primary Bid, for example, or Hargreaves Lansdowne, if you're in with a stockbroker of some kind or intermediary of some kind, they will generally send you out information ahead of time, ahead of any IPO. So, for example, I'm with Primary Bid. So another company that is a UK company that is going to IPO soon is PensionBee. So I've already had the offers out and the information out to say they're going to be looking to float. They haven't got a date just yet. That's still being worked through. But when you subscribe to those kind of services, you will get information out ahead of time about any potential IPOs and stuff. And generally, I don't know whether they tell you how many shares that you have. I haven't noticed that specifically, but it gives you the ability to buy shares. Most of these, I can't remember how many shares they actually issued under um, with Deliveroo today, but they normally issue in the million. So there's very very little chance that there are going to be too fewer shares that you can't actually buy in. In fact, smaller shares being made available in terms of volume can often mean actually the price moves up more, particularly if you have a really active market with a lot of interest. So yeah, if you're not with Hargreaves Lansdowne or someone like that, mate, definitely go sign up. I think Trading 212 also do updates, to be fair, and I'm sure Free Trade will as well. But I haven't noticed it with Free Trade specifically. So look, do you think Rishi likes how everyone is doing investing now? Yes, absolutely, because more money that is invested into the stock market is good for the economy. It means that money is available to these companies to actually reinvest. So with Deliveroo, their plan is to invest £1 billion in expanding the business. That should, in turn, result in, I say jobs, like they're paying a good wage. Well, some people will argue that they are, some people will argue that they're not. But based on what we're hearing, if they were providing jobs under employment, then that means that you employ more people, which means that people are come off social security, they go into the workforce, which means that taxes get deducted from that, national insurance get deducted from that. So it's a good thing typically. Rishi likes this kind of stuff. It's one of the stock market is an important component of the economy and how everything runs from an economical point of view. You then need to think about, when you're investing, the amount of people and companies that will have capital gains bills and stuff like that from trading, the trading fees, so on and so forth. So all this stuff is good. Rishi will be very, very encouraged by that at this point in time. The stock market is very important. Pete S is saying here that he got in. How are you doing, mate? How do you feel about today? Are you holding long term, or did you get in with the intention to have a short trade? What was your? He said he's feeling optimistic in a follow one here, and that is good, mate. I mean, I think it sounds like to me that you've bought it just to hold, which at the end of the day, this should go up. Time will tell. But as long if you bought it for to hold for the next 4 or 5 years, it will move from here. It's not going to go down the entire time that it's on the stock market. There will be positive months, positive periods. It's just going to be about how much of it you can capitalize on, and hopefully, if you have a strategy, you might have a position where you'll say, you know what, I'm going to cash out take a little bit of profit and leave some money in there, which you're happy to, take a high level of risk with. Who knows? But the approach is good. But I'm happy that you're feeling optimistic, mate, regardless of what happens today, because it's very, very easy when you get days like today to be like, oh my God, I've lost a load of money. I just need to get out and stuff. It's very easy to do that. It's human nature, right? We've all got loss aversion. So we don't like losing money. Don't like being in the position where ultimately it tells us that we are wrong. Nobody likes that. So, mate, I like that you're feeling optimistic. It sounds like to me you've got a plan. So, well done, mate. Someone saying here they placed an order for tomorrow. Okay, cool. What kind of order? How much are you looking to put in? Well, you don't actually need to tell me now, but you put how much are you looking to put in roughly in terms of shares? The beautiful thing about this being in like £2.87 is that you put in 20 quid, you get in put in 200 quid, getting quite a few shares in the business at this point. So again, still could be a very, very good opportunity, but I still urge you, just make sure that you're comfortable with how the business works and some of the underlying stuff that actually matters in the equation as well. And let's have a look. This is an interesting comment. I got in for the IPO, going to give it 12 months unless it shoots up before then. Yeah, good man. At least you've got a time limit on what you've actually bought and how long you're looking to hold it for. Many people buy stuff and they don't really have an exit plan. Sounds like you've got an exit plan, holding it for 12 months, see where it is. Good man. 250 of 64 shares. There you go. Good. Can we just say he owns one Amazon share? Mate, one Amazon share Amazon's a pretty good investment. So this is an update on Trading 212. They're slowly expecting new clients, but the list is massive. I'd be interested to see how big that list is. I mean, feels like it's been like maybe 8 or 9 weeks now since they closed down. They're not just not taking new customers because the list is so huge. There are operational issues that they have to sort out. So I would hope that by the time they do get round to opening all of the accounts that are in the backlog, that they actually have some operational improvements. We know that they've already introduced things like a small charge for bank transfers now, 0.15. I'm sure there'll be other stuff coming along as well, because judging by the amount of growth that they've had in their business, they're going to have to do something to make it profitable. It is kind of profitable, already is, but to improve the operational side of things like the customer services and the delays that they were seeing with placing trades, like they need to fix that, and that's going to take some capital. So this is a good question. Do you think it's good to buy into IPOs at the start? Yes and no. I think if you've done your research and you understand the business and you're willing to take that punt, then absolutely. I think it's good to buy into an IPO. I think what I often find and often see is that people just get into IPOs just because everybody else is getting into it. It's like you should never buy something just because there's hype. Like we've seen this with GameStop, we've seen it with AMC, we've seen it a number of times, mate. I think if you're going to buy something at the very, very start, at least do your due diligence, make sure that you're comfortable with it, make sure you understand what you're buying. There's too much of this blind investing going in where everybody just follows a trend or joins Discord groups with signals and buy this without really knowing what's going on. I think that's dangerous. So I think it's important to know what you're doing. And like I said, I rarely buy companies at an IPO stage. The way That's just my personality, though. I don't mind missing out on like a year's worth of investment returns. If they're a good business, they are always going to be around. So there's always an opportunity to make money with them. I tend not to go in at IPOs, but that doesn't mean that you shouldn't. I know that many people look at this kind of stuff as a really great opportunity to get into a new business. I'm a little bit more cautious than that, though. I like to do my homework. Yeah, this was something as well that someone pointed out earlier, that they're now looking at doing a little bit of work with Sainsbury's and Tesco's. Um, and you know what? That is a good thing, because at the end of the day, if you look at how they can expand their business, I think all of these things are great. One thing we do know about them is revenue is good. The revenue numbers are just ridiculous. The revenue numbers are huge. It's like 487 million or something like that. But what we know, and this is the big thing, whenever you're looking at numbers, because people will go through revenue and be like, oh, they're making so much money, they're taking in so much money. What they're taking in does not matter, right? It's like if you're earning 10 grand a month, and I gave this example this morning, if you're earning £10,000 a month, but you're spending £11,000, you're broke, okay? You don't have anything. You don't have any assets. You've got no financial backing, right? The same thing applies with business. If you're turning over 500 million a year, but your expenses in terms of your cost to do business are in the region of 580 million, then you're making a loss. It's not a viable business. And whilst these kind of things are really important in terms of actually growing the business, that will increase their revenue. They really have to focus around bringing down their costs. That's what they really need to focus on. So the argument is around, the structure, how they're going to actually streamline things so that they can potentially and ultimately return a profit. How much is it going to cost if by, you know, justice, poetic justice, they then have to give the riders pension contributions, holiday pay, national insurance contributions they have to pay on their behalf, sick pay? How much is that going to cost them with the number of riders that they have currently? What does that mean for the bottom line? Because that money will go into the cost of doing business equation. So when you minus that off, if they start cost cutting at this point, how much do they cut? Where do they cut it from? How do they cut it? And how does that add to the bottom line? If you then tag on, well, what's the cost of actually having all of these people that you've got currently on as employees? What does that do to the bottom line? Is there still profit within that? That's a tough question to ask and to answer, to be honest. And I'm sure that after this week, they'll be looking at that very, very closely to see where they can actually cut costs. Is one I don't have the answer to. I don't have the financial accounts. I don't have the privilege of being within the business to, decipher these kind of things. But other business ventures are great. It's going to grow the revenue, but where's the profit going to come from? That's the key bit. They have to keep the cost down. They have to bring their cost down. And I'm sure that's something that they are actively looking at addressing. Someone's put in £500. That's good. Having second thoughts. Yeah, if you're already in, I mean, it's up to you whether you close your position. I just think it's a shame to close your position at a loss if you're at a minus at the moment. I mean, how much have you lost today? Quantify it. It's not real until you literally cash it in. I mean, you might be seeing it in your account right now as a minus, I don't know, say 20 quid, 40 quid, whatever. But it's not real until you physically put in a sell order. You sell, you then realize that loss. At the moment, it's only on paper. So if you've bought in, try and hold it, see what happens. You never know. Like, I'm sure that the stock price will go up at some point in the future, but we know that the business faces challenges. And, the stock price is important. And unfortunately, challenges do impact the stock price alongside many other factors as well. Iconic Labs. I haven't looked at Iconic Labs, Romeo. Let's have a look into that. Hey, Tom, how you doing? What's Kevin saying here? I'm budgeting in a budgeting briefing. Rishi yesterday, and reporter asked him if if he did well in the stock market due to the pandemic. Rishi looked all nervous and said he doesn't discuss his personal investments. Yeah, look, politicians are allowed to invest. The question is, do they have insider knowledge? Because insider trading is illegal. Like, even when I was working for an investment house, I could not invest in certain things without getting compliance write-off because they had to make sure that I wasn't making a decision to buy a particular stock based on information that I gained through research or any one of the numerous reports that would come out every single day. The amount of times that I saw news about Jaguar, for example, or news about Rolls-Royce, and it's like, I can't go and act on those things because that would be illegal. The same thing kind of applies to politicians. And in fact, if you work in financial services, they have questions that they ask to ensure and to gauge whether you're a political person, or there's a phrase for it. whether you're a political personality or a person of particular interest. So all those kind of things are things that financial institutions actually have a look at, because insider trading is real. You can make a lot of money if you've got the information available to you before the general public know. You can move quicker. You're more fluid. So I'm sure there are checks and balances. I'm sure there will be. There's lots in the financial services space for those kind of people specifically. But I'm not surprised he doesn't talk his personal investments. I wouldn't either, to be honest. So Romeo saying here that he likes IPOs as more of a day trading event. The price will either drop massively or skyrocket. Spot on, and that's why you find a lot of traders will look forward to things like IPO days, because it's an opportunity. And if you call it right, based on look, if I was if I was inclined to do any trading, I would have shorted this yesterday. So just looking at what happened. Number one, really bad press. You looked at the initial valuation at 8.8 billion. You're thinking that's very, very, very ambitious. They had bad press after that. They then reduced the valuation from 8.8 billion to 7.8 billion. So it's like you take a billion off just like that, like it's nothing. You then start to question it really, really hard. Like, how do you wipe a billion off your valuation? Because secretly they know that it's an issue. Secretly they know, and they would have been panicking. I said this morning, they would have been really, really angry with the negative press that they had this week. That's just a natural reaction. You're going to get that, right? And they would have been scrambling, thinking, okay, this could really mess things up, as it has today. So they would have been scrambling. Don't get me wrong, a lot of people would have made a lot of money today off the back of this. They just haven't made as much money as they had hoped that they were going to make. So I wouldn't feel sorry for them in any way, shape, or form. But, many people use this as an opportunity to scalp, to day trade, to make a little bit of money on the fly, looking at the news, looking at what the sentiment is, and making a decision of, like, actually, you know what, I'm going to short it, I'm going to long it, because I think it's going to do really, really well. And people make very, very good money doing those kind of things. But again, it's the skill set of knowing how to actually do that. It's an interesting one. I live in the UAE. They're key players in the market here, and all the employees type issues apply. Yeah, I mean, I come out to Dubai quite a bit. I mean, yeah, I mean there are tighter rules out in Dubai than it seems here in the UK, mate. So yeah, I mean, when we were out in Dubai, we ordered a couple of times, and we've had Deliveroo actually deliver to us. But yeah, I mean, different countries, different rules. There are a lot tighter rules out in the UAE than over here in the UK. So I'm not surprised. But yeah, they're everywhere out certainly in Dubai when I've been out there. This is a good one. How do people buy shares before the internet? Did they have to go to the bank and stuff? And was there an actual stock market building? Yes, there is still a stock market building, mate. So back in the day, you would have like a stockbroker. So you would do all of your trades via a stockbroker. And people would do things over the phone. People would do things, just generally just through brokers normally. That's how they used to do things. Technology has transformed everything, has allowed people to have access to the markets at a moment's notice, which is great, which is why you're seeing the impact of that is the volatility of the markets. If you went back, 20, 25 years ago, the markets were nowhere near as volatile as they are now. But as technology has progressed and people have access to these tools to be able to access the market, and people are obviously earning more money, and technology means that as you open that up, you can have people from different countries, demographics, socio-economic groups start to invest. Then that interest and that influx of that cash means that actually the market becomes a lot more buoyant. Demand increases, supply decreases as a result of that, and therefore you get the volatility. And just actually as well, if you look at it from the institutional side as well, the leaps in the technology means that these guys now institutionally they can do high frequency trades, and that does impact the market quite a lot. And the high frequency trading guys, like the amount of trades they can carry out within a very contracts that they can buy, and that gets very, very technical at that level. The contracts they can buy with a margin of a spread across different markets globally that they then resell. Like, these guys do a lot of this stuff, and they make a lot of money in the institutional place. So people used to use mostly stockbrokers back in the day to access the markets. Let's have a look. Have you seen? This is an interesting one. Have you seen the team Ryan Cohen is putting together, all Amazon and Google superstars? I haven't seen that. I haven't seen that. I'll have a look into it. Too early to invest in Deliveroo. Many people will take that view. So speaking of IPOs, I will never forget the massive undervaluation of the Royal Mail when it was privatized. How could the government analysts get it so wrong? Is that something that happens often on IPOs? Yeah, sometimes it will happen. Sometimes you're going to have IPOs that will do really, really well, and you know, I think a lot of the time it's about demand, right? And when you look at demand, it's also about how people actually get access to the information. So, Royal Mail, if you look at Royal Mail and you look at a company, I don't know, what's a good company that you could probably, Coca-Cola, right? People know Coca-Cola over Royal Mail so much. And I think, in this instance where they undervalued it, they probably had a look at it and thought, okay, how much of this stuff are we realistically, what is the realistic price for this stock? Not actually realizing that people were really, really interested in the stock in the first place. They just gauged it completely wrong. But you got to remember, human beings go through this process. And yes, there's a little bit of, um, technology that feeds into it as well. But it's not uncommon for people to make mistakes like that. It's one of those things. People make mistakes investing all the time. Professionals make mistakes investing all the time. Don't get me wrong; they definitely wouldn't have lost any sleep about it, because at the end of the day, like I said, these guys have made a ton of money today. They just haven't made as much money as they thought they were going to make, which is a sad fact, but it's a fact nonetheless. This is an interesting one. I don't recall this one. Kingston Communications. I don't recall this one. What happened with it, James? Put it down in the comments here, because I'll be interested to know. Where are we? Is investing only £100 to £300 a month enough for a significant gain over 10 years, over 10 or so years? Um, what so? What do you mean by significant gain? This is subjective, right? I think when you're investing, you need to have one eye on how much you can make. Okay, because obviously there's a financial calculation that goes into this, right? Nobody wants to invest money and not make any money. You're not going to take that risk if you're not going to make any money. So, but the the concept of um, significant gains, that's subjective. For some people, significant gains is 78% a year, 80% a year. For others, it's 5-10%. So it depends what you're alluding to. I think if you're just starting out, though, I wouldn't be focusing on the returns that you're going to get. And I know that sounds a little bit counterintuitive and maybe stupid. You're thinking, what on earth are you talking about, P? But I think the habit that you're getting into of simply just investing that at that level every single month is more important than the amount that you're actually investing and potentially the returns that you're going to be investing. And the reason why I say that is this. If I knew in my 20s and just developed the habit of just putting away 50 quid a month into an investment, I've got that habit that it's just routine. I don't think about it, it's automated, it just happens. As I started to earn more money, that amount would naturally grow because that will be a percentage of my monthly income, right? So the habit means more, because if you can get the habit in place, the habit is going to is a drives your behaviors essentially. And as you earn more money, you're going to save more, you're going to invest more, and off the back of that, you're then going to see the snowballing effect of compound interest. So I don't know what you mean by significant gains. One thing that you can do though is go onto a compound calculator, compound interest calculator. Just Google compound interest calculator and put into the calculator your monthly amount of 300 quid, 10 years, and put in an average return of 7% or 5% or something like that, and see how much it kicks out. I promise you'll be very, very surprised at what that number looks like. And if you then double that to 20 years, you'll be extremely shocked at how much money starts to pile up and ratchet up over time if you've got it invested in the market correctly. And again, talking about gains, how are you going to get the gains? Getting the gains doesn't necessarily mean buying into companies individually. There are different ways in which you can invest. You need to make sure that you're invested in the way that best matches your personality, your lifestyle, and what you effectively want. I'm just having a look and see if there's any other comments on here. I'm just looking at the time because I've got a 6 o'clock. Have I missed anything? Kev, I've not looked at Rolls Royce, mate. I need to do an analysis on Rolls Royce. And like I said this morning, so we're doing a lot of stock analysis with the group of people who are in the members area of the channel. So in that area, we essentially meet every Sunday. We go through stock analysis, that kind of stuff. We talk about all things actually. I mean, there was a long discussion this morning about Deliveroo. There's also a lot of stuff where people are actually recommending people, it seems today, for like roles and jobs and all this kind of stuff. So it's a real nice community in there. We do talk about stocks, but actually people do actually have conversations as well about other things. So we will do a Rolls Royce stock analysis inside the members group. So I don't know much about Rolls Royce without looking into them. I certainly can't comment on their future unless I look into them. Let's look and see what we've got. Yeah, I love this. I absolutely love this. I've been buying Tesla at these low peaks and reselling at a 5 to 10% return. There you go. Look, listen, opportunities are abound out there as long as you know exactly what you're doing and stuff like that. I mean, I think with a company like Tesla, it's always going to be volatile. So if you're able to get in and you've got a target of what you want to sell at, there's nothing wrong with that. People do that every single day. Like professional traders do that every single day. It's just about making sure that you're going to pick something and buy something that you feel is going to go up and down. And you might need to have reasons behind it as well. Well done. This is interesting. Can see a battle between Deliveroo, Just Eat, and Uber Eats for the market. So I said this morning. One of the reasons why they ended up with the original professional estimation valuation for Deliveroo was actually 7.5 billion or something like that. They upped it to 8.8 billion. And the reason why they gave it that initial valuation of 7.5 billion was because not for two things. Number one, Amazon had a 16% stake in there, so they felt that kind of confidence would imbue the market a little bit. And also, there is real potential, and I think a lot of them are betting on this, that they will get bought out by a competitor. I showed a slide this morning that kind of highlighted Deliveroo's position in the market. So they sit second or third in the UK at the moment. The biggest by far is Just Eat. So there is speculation that at some point in the future, Just Eat may say, you know what, we need to consolidate the market, and they get bought out as a result of that. And I think there's an element to the fact that there is that strategy in the background to it potentially. So I think you're spot on there, Lee, because that is something that they are looking at. That's a member. It's a great community. Everyone should join. Thank you. Cheers, Tom. Appreciate it. I spoke about this morning. Cheers, T. Liking these lives. So in the community center section of the channel, I posted something in there just to capture what you guys would want me to talk about on live. I am struggling. Well, I am struggling with the sheer level of questions that I'm getting from not just the comment sections, but in the DMs and also via email and text now. And email and text, no one should really be emailing me or texting me unless you're seriously thinking about, coaching sessions. But I've had a massive influx of emails and texts now, people asking questions. When I go back and say, look, now you're asking for my time, you can book a coaching session. I'm getting a little bit of abuse back from people because I think the expectation is that that I am going to be doing all of this and answering most of these questions for free a lot of the time. So I think with lives, because they're easier for me to actually produce and do, I haven't got to think about editing, but I can just think of a topic and maybe take questions from you guys and be a bit more interactive. I want to do more of these. However, I do need to know from you guys what topics you would like to have covered on the live, because they have to be anchored to something. So this one was anchored to Deliveroo. That's what we've been speaking about. What do you want them about? So I don't want to suggest things to you guys because I think I'm going to be feeding you ideas that may not appeal to you. I want to hear what you guys want. So in the um, in the community sections, there is a post on there. Give me your ideas. It doesn't have to just be about finance. It can be about anything at all. All suggestions are welcome. And if I get a good number of these, what we're trying to do is maybe schedule these for a more regular timetable, where we either do it, once a week or twice a week or every week on a particular day at a particular time, and we can have a conversation. You can ask questions, so on and so forth. Um, that will help me get through questions that I get so many of. I've got about 100 or so waiting for me on Instagram right now in my DMs there. You'll help me power through some of those, interact with you guys a little bit better, but also just mean that it helps to, number one, grow the channel. And yeah, but let me know. Leave me some ideas because I'd love to know. If these work for you, then I will do more, but I just need to know what it is you want me to cover. This is a really good question. So, looking through things today, they don't think that the Uber Eats ruling is going to impact um, Deliveroo. There were some technical reasons behind that, but who knows? Things could change. I think, though, because it's been in the news for the past week or so, and there were videos of people saying, I'm averaging £4 an hour. Like, they need to sort it out. The responsible thing would be to sort it out. However, I said this at the top of this stream, right? People will say it's not personal, it's business. So are they going to do the right thing? That is the question. At the end of the day, you never really know because we're talking about money here. And when you start talking about money, often the right thing to do isn't the decision that is taken. The rational choice to be made is not the right choice that people often make. They look at the bottom line. So I don't think it will. The speculation is that it won't impact them at all, but it could be wrong. But a really good question, mate. Question here from Romeo. I think it'll be great to do some tutorials for Fineco account, but not just for YouTube content. I want to know if we can help in any way to get you a contract with Fineco for that. Good vibes. Cheers, mate. So I'm already doing some work with Fineco already. In fact, I have actually got a video on the Power Desk coming out separately. That is due to come out in the next couple of weeks. I literally just finished filming the last section for it. I did mention the Power Desk this morning, mate. Like, I've worked for investment houses before, and they would have like Bloomberg terminals, and these things cost, upwards of 20 grand a subscription per year. This is a professional grade like tool. You get that all included with your Fineco account. Like, you can trade from that account, you can invest from that account, and you get access to the Power Desk as standard. For people who are serious about trading, this thing is the bee's knees. Like, it is proper. It really is great. So I've got a video about that specifically coming out. And because obviously with Fineco, there are some fees that are obviously, you've got to pay to obviously use them and so on and so forth. But when you compare them to places like Hargreaves Lansdown, maybe eToro, for example, they do come out better in most cases. But I have got a video on that coming out in a couple of weeks' time. But really appreciate that, Romeo. Really, really do. The guys at Fineco are actually really, really cool as well. Yeah, they're a bank, so they do take some time to get back to you and everything. And I've had mixed feedback about their customer service and just understanding them because they're obviously Italian based. I think that's all stuff that they're trying to work on, but there's no denying that the tool is really, really, really good. So watch out for that video. It's going to be really, really interesting. I would love to do maybe tutorials in private sessions and stuff like that. Maybe I could even get one of their guys to actually come on and perhaps do that, but it depends on whether there's any interest for that kind of stuff. So we'll see. Right, I'm conscious on time, guys. I've got a meeting in about 10 minutes. Let me just scan these very quickly, see if there's anything else. Yeah, I would answer this. This is a really good question. I'm new to the market, Jamie and MC. I'd like your thoughts. Yes, I'm a noob investor. Jumped into the hype, wanting to take this seriously from now on. Mate, you know what? It's very, very easy to get caught up with the hype and FOMO, because FOMO is a big thing, mate. Like, if everybody's doing something, you feel as though you've got to join in. And unfortunately, social media doesn't, social media focuses on the positive stuff. This is how much money you can make. This is how much money I made. This is why I'm driving this Lamborghini, which is likely rented, and why I'm wearing this Rolex, which is likely a freaking replica, right? Social media focuses on all of those things. They don't tell you what happens when people lose money or when you have a bad day. People don't highlight those kind of things because that's not what's sexy. It doesn't appeal, right? Everybody wants to live this lifestyle of I'm doing big things. Well, you also need to show the opposite side to it as well. I often don't have good days at all. It's one of the reasons why we're talking about doing lives and trying to make it easier for me to be able to produce content. And if you follow me on IG, I said it, when was it? On Monday? I think it was on Monday, maybe on Sunday. Like, I've struggled over the last couple of weeks with the sheer volume of comments, questions that I'm getting, and frankly, a little bit of abuse as well that people are giving me because I've got a course for $59.99 that people think that I'm just lining up subscribers for and making a ton of money. It's like social media is an ugly, ugly place, and a lot of this stuff is completely unwarranted and completely uncalled for. Little did I know that I was going to be in this position last year when I started this, and I think it's a learning curve. So I have bad days as well. And I think it's important as well that we're able to share those with people so everybody knows that it isn't always hunky dory. But on the investing side, mate, just know when you're investing, you are going to have good days and you're going to have bad days. The thing is, are you going to be able to take the smooth with the rough and not panic when you have a really bad day? Because trust me, bad days are coming, but you're also going to have good days. So you have to be willing to take both. That's how it essentially works. Right, guys, I've got to log off. So I've got 8 minutes to get into this meeting. But guys, please do. Right, so before I leave, we've got 13 likes. There are 57 of you on here, I think, at the moment. Can you smash the like button for me as well? Because the YouTube algorithm really, really can hurt a channel sometimes. If we've had, I don't know how many people have watched this concurrently. We've had 578 playbacks or so. If I get, 10, 15, 20 likes on this, YouTube will just be like, oh, that wasn't useful. People didn't like it. And they don't recommend or push this video to anybody else. Furthermore, they don't push any of the videos that I produce on a Tuesday and a Friday because they think that people who watch the channel don't enjoy the content. So things like smashing the like button is really, really important. So if you can do that for me before you leave, that will be absolutely amazing. Please give me some feedback on some of the topics that you would like me to speak about on live sessions like this, and we can make it happen. Guys, look, have a great evening. Next video is going to be out on Friday. Actually, we've got a live session on Sunday evening. So I will see you then if we don't speak before then. But thank you for spending this time with me. Catch you in a bit.